All right. Here we are again. Monday morning, new month, October 2nd. My name is Lane Turner, and we are getting ready to watch the opening bell of the futures market, actually, the stock market on the futures exchange. We are trading over here in the futures market, so out of Chicago, a different exchange than what you generally see if you're trading the stock market, which is out of New York City. So this is the Chicago markets, but we're looking up in the upper left-hand corner. We have the S&P 500. In the upper right-hand corner, we have the Dow. Down in the lower left-hand corner, we have the Russell 2000, and in the bottom right-hand corner, we have the Nasdaq 100. And we're going to watch these markets open up here in just a couple minutes. It's 7:26. We got 4 minutes until the opening bell. And my name is Lan Turner, and I'm a former instructor at the Chicago Board of Trade and the Chicago Mercantile Exchange. And we're going to go through and learn a little bit about trading on the futures exchanges. Give you a little banner just to show you who I am. I'm also an educator. I teach classes at Utah Tech University. And actually, tonight is our first night of the year. So, in person classes at Utah Tech University. If you're in the St. George area down here by Zions Park or by the Grand Canyon area, that's where we are. We're about an hour and 20 minutes north of Las Vegas, Nevada. And so right over the Utah border. And so we're up here in God's country where everything, all the rocks are beautiful, red rock country. So we'd love to have you come and visit us here in St. George and come to the university. Everybody's welcome. I teach night classes. And since I teach night classes, most of the attendees are actually adults. Not that kids aren't adults, but not the college age kids. We get a few college age kids come to the classes, the night classes, but mostly we get the adults coming to the night classes. And so you're all welcome. Everybody's welcome to come and join in, and tuition's not nearly as expensive at night as it is if you take the daytime classes, and you can register with the university. But let me know if you're interested in going to the university and meeting me there in person tonight, first class. So hopefully we got some of the university students in class. I did tell a few of them that we were going to be here, so did send out an email. We got John Mackey in the house. John Mackey's here. Nice to see you, John. We got Matt Baker saying good mornings. Nice to see you guys here. We got some regulars that are great to see you. The market's been taking off here a little bit. I've got some new technology I'm going to try. I got a new microphone, as you can see, and new headset. So hopefully the audio is a little bit better, depending on where I'm at. Since I'm down here in St. George now, not in my summer home, down in my winter home here at the university, then I have different equipment down here. So kind of we'll see what we can do with this little bit different equipment. Got this new camera up here, and I can also do some fancy stuff where we can switch between markets. So let's see if we can give a little demonstration of that right now. See that? This is the Dow and the Russell 2000 and the Dow. And notice we got the 2-minute chart on the left-hand side of the Dow, got the 2-minute chart on the left-hand side of the Russell. And so now we can see a little bit better view of what we generally like to look at when we're trading. We like to see a 1-minute chart, which is the chart we execute our trades on, and then we like to see the 2-minute chart, which is the trend that we like to trade. So we're trading the trend on the 2-minute chart. That's our long-term chart. And then we got the 1-minute chart, which is where we execute trades. So you can see right now we're looking at the 1-minute and the 2-minute charts for the Dow and the Russell. But if I flip this little switch right here, oh, maybe I won't flip the little switch. There we go. Here we go. Switch the little switch. There we go. We're back to all four. S&P in the left corner. These are all the 1-minute charts as we watch the bell open up. And we got what is it looks like we've got about right there. The bell's just open. Ringing the bell. All right, here they go. Here go the ponies. Let's watch them go. If you look at the NASDAQ down there, the NASDAQ made a beautiful run just prior to the bell. We had a couple of nice trades opportunities. There was one little opportunity right there to get in. The market ran a little harder than usual. I like to see just about 4 flat bottom bars and then a pullback. This one went 5, 6, 7, 8, 9, 10, and then pulled back and then only made a 3-bar rally. And then came in here and made another nice little pullback right there and another little breakout at the top. So we're looking to see this market flush out the bottom, break that natural trend line right in there, the average true range. These are the average true range. So this is the ATR, is what we call it. ATR stop, and it's the average true range of the market. And I've only got it set to 1 to 1. If you want to come in here, and we're going to look at the ATR. In the ATR, you can see the settings over here just set to 1 and 1. And that's all we're doing, just a simple ATR setting of 1 to 1. Kind of helps us identify when the market's bullish and bearish. So you can use these as buy sell signals if you would like to, but for the most part, I use them as bullish bearish arrows just to help me indicate whether the market is bullish and bearish. When we have the 2 minute charts that we can see on the screen, right now we're just looking at all 1 minute charts. If you have the 2 minute charts on the screen, you can see that we actually use a tool called the bulls and bears on the 2 minute chart. On what we call the long term chart, right? 2 minute chart is the long term chart when we're day trading or scalping like this. So I have a tool called the bulls and bears, and that tells me the trend of the market over on the longer term chart, and then we use the ATR on the 1 minute chart. That's how I like to do it. Again, I'm not here to tell you how to trade. I'm just here with you to have fun and show you how I trade. This is what I like to do. All right, so let's get back over here. We're going to watch this bell, the morning bell. We don't generally take a trade off the morning bell. Um, we've been watching the Russell kind of be our best markets lately. We've noticed that the Russell's had the best trends, but this morning it's been a little crazy too. Look at it whacking out. It's going crazy. We got lots of topping tails, lots of bottoming tails, small bodies. That's an indecisive market. So I don't want to be trading right now because it's all indecisive. Don't know whether it's going to go up or down, bullish or bearish right out of the gate. So we just kind of sit and wait. The Nasdaq was the one that was the best. That one actually pre-market session had a really nice bullish run. We do have some news coming out today, so in a second, let's pull that up and take a look at the news that's going on. I want to kind of watch the market here just a little bit before we jump over and start looking at the news. I got another little idea for us. I've got the stocks software all lined up and some stocks tools all lined up for us to spend a little bit of time looking at the stock market today. I thought it'd be fun to jump over and actually look at the market out of New York City as opposed to out of Chicago. Um, and we can go over and look at some other markets too. We got gold and silver. We got crude oil. We got lots of different things we can look at. We can look at the currencies. We can look at traditional commodities. We can look at corn and wheat and soybeans. We can go look at those. But right now, I just kind of want to watch the opening bell here on the Nasdaq, the Dow, the S&P, and the Russell, and see how things are going. Hope you guys are having a good morning. You had a good weekend, and back to ready to hit it again. Again, I'm teaching my live in-person class tonight at the university, so I'm kind of looking forward to that. Working on my presentation, getting a whole new curriculum ready to go. So these guys that are coming in fresh and new get a whole new thing to look at and all kinds of great new information about getting started here in day trading. That's what they want to learn. And so that's what we got the class. We got a nice class already. A bunch of guys registered and signed up. So I'm looking forward to teaching that class tonight. We got this market here in the Nasdaq. Looks like it's starting to rally. We got the VWAP up here. This blue line is called the VWAP, volume weighted average price. Market's starting to rally. Looks like it's going to go up and touch that VWAP. But look at the other markets. Look at the Dow. Lots of topping tails, lots of bottoming tails. Doesn't look real positive here. The Dow's kind of very indecisive. We got the S&P 500 up here breaking that previous high, attempting to break through that average true range, which is up here. I've got so much going on my computer right now. Things are just a little bit slow. So may have to close down some of my tools that I got running. But watch that S&P. Looks like that we could get in right there. That would be a nice buy signal on that pullback from lower high in anticipation of a continuation of the uptrend. We could, everything looks like it wants to go up. Let's see if we can't get in on the S&P. That S&P. See if we can't get the S&P. Don't generally like to trade the very first trend right out of the gate because oftentimes that ends up getting you whacked because the market likes to move up, create a high, turn around, come back, clean out everybody's stops, whack everybody good and hard. We've got 4 flat bottom bars, which usually is a sign that we're going to. So as soon as I get a sign of weakness in there, oh my goodness, look at the Dow. So that gives us some, but I don't want to see a sign of weakness, see this thing flush because it does that sometimes. We'll get it up there and it'll come flushing all the way back down and hit our stop. So we might have to take a quick scalp here. I only went in long with one contract. I want to maximize my profit potential, but I also don't want to Let it run. Cut your loser short, let your winners run. But also, if that thing comes flashing back, I don't want to lose some of the profit we build up in here. We can take a quick scalp off this thing, but I want to watch and see. As soon as we start showing weakness, we'll take a little bit off, maybe just get a little bit in there on the. Oh, see that? It's starting to show some weakness right up in there. Slide that stop up in there, not too tight. Oh, yeah, we got stopped out anyway. But that put $137 in the coffers. Gives us a little bit of a buffer there, so that we can start trading. If we can build up ourselves a little buffer, in this morning session, then we can start trading larger quantity size out of the gate. But I like to start off getting just kind of building myself up a little buffer. Here it's starting to continue. It looks like it wants to go higher. We got that VWAP up there coming in, intercept that 43.30. So this is kind of my target spot up in here. I think I want to see it go up. I'd like to see it go up and test that area right there. The Russell is usually the one that gives us a little bit better trend in the morning, and this morning it's not performing for us. There, the Nasdaq just did hit our goal right there on that VWAP, so it came up, touched the VWAP. So let's watch and see if we can't get another opportunity to get in on this S&P. It's breaking above a previous high right now. That's a buy signal right there if we wanted to take it. I'm not real fond of that buy signal, so I'm going to let that one go by. Might still go. It's just not the strongest buy signal for me, and so I'm going to wait because it is kind of this crazy morning bell time frame. I don't know when it's going to flush and come back down. So we'll watch. Dow's giving us a couple of topping tails like this. Is showing weakness to the upside. So it looks like it's getting ready to flush back down. So we'll have to watch that one. Look at all the topping and bottoming tails. We got two flat bottom bars on the Dow, and that's all we got out of that thing. So the Russell's starting to flush. Look at it's flushing down. So that means we'll probably watch the Nasdaq flush too, and we'll probably see the S&P flush. Now remember, these markets are kind of like porpoises. Porpoises in a wave. They all kind of like to go together. They all kind of like to dance the same dance. But when that stops happening, and they start going all kinds of different crazy directions, you have to be careful because that means there's some indecision in the market. You get some markets, like the Nasdaq is still trying to break higher above this VWAP. If it holds up there, but look at the Dow. It's starting to fall, show the weakness. The S&P starting to show weakness. So the S&P, if we can get one more lower high, we may want to drop another order in there to go long. It wants to go right now. It's going to go up and touch that VWAP. I think it would just be nice to be able to get a better buy signal in there on that one. And this is what we're looking for here on the Russell is a little pullback and a continuation of the rally. But that market's been so weak in the first place. Not sure I want to really jump in there. Look at the Nasdaq. Holy cow, that thing's taken off. But look at the Dow. It's showing the weakness. It's showing a pullback. But that may be our little buy signal opportunity, right? Break above the previous high or the little pullback and then break those red bars and go to the long side. The Russell staying above the average true range. So if it'll close out that bar above the ATR, that would be a buy signal for us, and we could at least drop an order in there to take the possible long position out the top on this Russell. The Nasdaq's getting ready to go long. Oh, let's see if we can get in there on the Nasdaq. That's a buy signal for us on the Nasdaq, especially where not the Nasdaq, the Dow. Oh, looks like the Russell's failing. Boy, look at that Nasdaq go! Holy cow! What got its excitement? Let's see if we can't get this one out. Well, see, there goes that S&P. I think it's going to go up and touch our goal up in there, which means we could see the Nasdaq or the Dow pull up. I want to see the Dow go. The Dow's starting to show weakness. Oh my goodness, look at the Russell down there breaking below this. We got 3 red bars now. Not excited about seeing the Dow do that. That pullback's not good on the Dow. It's coming down and with this little steely knife, it's poking those yellow dots. And so we got to see it not close below those yellow dots. We want to see it stay up there. Show some strength, give us a little bit of a bullish run up to that blue line. That blue line is the VWAP, volume weighted average price. So it's just an average of the market, but it's got volume included. And you can see right here at the opening bell, we just get a whole bunch of volume jumping in there. So, man alive, that's some bad FOMO on that NASDAQ. Seeing that thing go like that and us sitting here on the side playing around with the little Russell. We got 100. Was it the Russell? No, we were in the S&P. S&P's all right. We got $137 out of the S&P right on that first little break. We just got a failure. It looks like we're going to get a failure on that Dow. It's stabbing it once more. My orders are pulling in there tighter, but the market's going the wrong direction. So I was looking for this market to break higher and give us an ABC pattern. That's my pattern. I like to see an ABC. So I like to see go A, B, C, and then continue up and break higher. And for us, we wanted to see it come up here and come up and test that blue line, that volume weighted average price. Look how close we got on the S&P to that 43,330, which is where we were looking for it to go. Okay, the Nasdaq is pulling into a little wedge pattern triangle formation here, but it's way up at the top of this big long 10-bar trend, so I'm not really anxious to go long off the top of that thing, but holy cow, that market's really got some legs on it today. Let's wait and see what kind of pattern we get right in here, see if we can get some areas of support. There, we got to kill our order. There's our order. We're out of that thing because it just closed, got the down arrow. Getting choppy in here. Look how we got the chop, 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 chop. Look at all the yellow arrows back and forth across that average true range. We need a market that's going to trend, and that NASDAQ seems to be the one that's doing it. That's a little pennant formation right there. See how we got lower highs and higher lows? That's a pennant formation. I call it flagging. The market is flagging. It's making a little flag right there, and generally that's a good place to, is what I call a decision point. It's a point where you have to decide whether you're going to get in long or short, whether you're going to trade this market. We could do reversal trades. We could come and we could actually bracket this market. That might be something fun to do, but oftentimes the bracketing in the market can get you in trouble too, because we put one on if it breaks lower, and we put one on the top if it breaks higher, and then we use the opposing order as our stop order. Nasdaq's a big market, but we got a little buffer in here, $137 buffer that we picked up off of the S&P. So let's see what happens here with the Nasdaq, and if it doesn't break. If it breaks higher, you go long, which I don't really want to do right here because this is up there. I'd expect it to flush back down and go down and test out this lower region again. We'd like to get a bracket, right? A little bracket of the daily market. So we get a bracket here on the let's bracket this high for the Russell. It's right here, and the low is right there. We're kind of breaking that low right now, but we haven't really established the low. Are we in the market? No, we haven't broken out of that flag formation yet on the Nasdaq, which is not good. That thing should pick a direction and go. So we're still waiting for that Nasdaq. There we go. We're short the Nasdaq, and our opposing order becomes our stop order. Now the problem is if it doesn't just immediately flush and start to fall, then and it starts to bounce back, we'll just get stopped out with a loss. Oh, look at that. And we maybe should have had that be a reversal order and start taking a long position here. We'll see if it wants to break. Yeah. See, that took that's a big market. That Nasdaq took our entire, we lost, took our entire profit and lost us $22. Now it's, come on, buddy. Give us our money back, you little thief. Watch it, watch it. It's rallying. We're going to see if we can't just get a quick scalp out of this one here. Be patient, Land. Be patient. Be patient. I want to drag my stop to break even, but because that thing's going to flush back down and try and take our money away. Yep. Too weak. So we're back to break even now. So that trade right there, where we tried to bracket that flag, it faked out to the downside. Now it's faking out to the upside. Now it's coming back down again. So it's losing its mojo. So now it'll probably flush and go down without us. Because look at the Dow. It's just got a signal. While we were trading the Nasdaq, it got a signal to the short side. See that? So we got the down arrows, and then I got the little green pullback and break below the green bar. That would be a sell signal. Same thing over here on the S&P. So that means that we probably see this NASDAQ start to fall too. So we're going to try one more time on the NASDAQ. We're going to take a short position on the NASDAQ and see if that thing won't flush lower with the rest of these markets. Nope, it's going to go back up and stop us out with another $200 loss. Watch this. You lousy bum. Come on, flush. Flush like the other markets. Follow, 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 follow. Follow, come follow me. Come on, follow, follow. Follow, follow, follow. Go ahead, you can do it. Just flush down, just like the other markets. Come back down to that VWAP. That's all we're asking. Just come down to the VWAP. Come on, baby. Come on. Come on, baby. Be decisive. Don't have this indecision. Breaking through the yellow dots. Come on, come on. Chase it. Come on. Here's your bait right here. It's just like fishing. Here's some bait. Come down and get that bait. Yeah, you wanna feel that order, don't you? Come on, come and get it. Come and get it. Come on, come and get it. There it is. Come and get it. It's down here now. Come and get it. Tease the market. There's an order right there for you. Come and feel it. Come on. Feel it. There you go. Come on. Get it. Get it. Get it. Come and get it. Come on. Don't go back there. No, don't go back there. Oh, you dirty, rotten little bugger. Come on down. Come on down. Come on down. Keep coming. There it is. Come on down. Come and get it. Come and get it. There it is. Come and get it. Look at that Russell. There we go. Come on. Come on. It's right here for you. It's right here close. Right there. Easy. Oh, man. Look at it backing off. That wasn't any good. I thought we were going to have. We had $250 in there and we didn't take it when it touched that blue line. I thought maybe it'd break that and go through. Now it's backing off on us a little bit, showing some strength to the upside, weakness to the downside. I didn't take my profits when it touched that blue line. I thought it might continue to fall given the fact that the rest of the markets are falling. It still might. It's just pulling back up against that. See what's going to happen. We'll have to wait for just a second here. Come on, buddy. What are you going to do? That's a lot of money on that market. From the top of that, just that trend right there, that's that one bar is $470. That's $500 move on that one bar. We should probably enlarge this to give us a little bit better idea of what's happening in there. But that's a big that's a lot of money right there from the top of that bar to that bottom. That's $420 in one bar. So when you're trading that one, that's a big market. So just to give you an idea of the difference, if we come over here to the Russell and we drop in our dollar from the top of this bar, let's say from the top of this bar to that bar is $160. So you can see it's almost twice as big over there on the Nasdaq. So okay, if it breaks below this, it's making another little flag right here. So it's flagging again. That's a big flag. And now we only have $57 in our bank account. So we probably ought to be careful on that. When we come over here, look at the Russell, it's flagging too. It wants to continue down. But already come all the way down here. Now it's starting to establish our new low. This is our new opening bell low right here. So we could actually trade this one to the long side right there. It's breaking up. But that's the first break to the long side. I'm not real thrilled about that because oftentimes it just goes up and turns around and falls again, right? So let's watch this down here. You can see the CMF is way down here in the lower region. We got the DMI climbing like crazy. So this is a good, strong market. So we got some good, strong markets this morning. Show you. We've got our economic calendar. If we come in here and take a look at the economic calendar just real quick, what we got going here, 8 o'clock, we got the manufacturing PMI, and that's going to be in, what do we got, 7:50? That's in 10 minutes. So in 10 minutes, we got a big report that's going to move the market. So ISM manufacturing employment at 8 o'clock. So we got two good size markets, or two good size government reports. And then as you come down, you notice that this afternoon, 11:30, we got Fed Williams speak, and Fed Bar speech is 11 o'clock. Now, they're not raising interest rates or anything. They're just going to tell you how lousy the markets are doing or how lousy the economy's doing. Actually, they're going to tell you the economy's doing wonderful. It's doing great. That's what they're going to tell you. They're going to be very positive today. Oh, things are so good. You can't believe how good things are. Let's spend more money. So that's what they're going to tell you here at 11:30. And then Fed Master Speech at 5:30 tonight. So Fed Chair Powell speech is at 9 a.m. So that was this morning right out of the, what time is it? Oh, it's 8 o'clock. So 8 o'clock, my clock is wrong on the wall. So it's 8 o'clock, 9 o'clock. So 9 o'clock, we've got Fed Chair Powell speech. Now that might move the market a little bit. Fed Harker speech at 9 o'clock. That's good timing for the market to. So we've got the Fed speaking today at 9 o'clock. Let's keep that in mind. It's 8 o'clock right now. Okay. Oh, look at that thing. Broke out the bottom. Broke out the bottom while we were off looking at the market. That thing flagged right there on the NASDAQ. Broke out the bottom. So broke that average true range. Right there. And weigh it down it went. So it's flushing below the average true range. Well, this is still the morning. There, that Russell flagged right there and it's dropping out the bottom. I thought we might get a rebound on this and go bullish, considering that the market's already been quite strong to the upside. Let's see how our Fibonacci numbers are looking. Let's clean up some of these things and come in here with our Fibonacci pullback. So if we go off the low here to the high, we're coming back. We're touching the 50% level right now on the Fibonacci pullback here on the NASDAQ. And these things are making nice projections. So if we grabbed our 1, 2, 3 tool here, 1, 2, 3, we're coming down and touching the 200% projection right there. That's a pretty amazing on that ABC top formation off of the Dow. You see all these good little patterns in here, and here we are sitting at $57 because we got whacked a couple of times and then didn't catch the big trends. So we're right back. Now, a lot of guys will buy that, and I've done that in the past myself a little bit, but if you're trying to build a position to the long side, you can watch that CMF. See how the CMF is coming down there? We can turn that CMF on the, let's go try some of this magic that I was playing with earlier. We're going to go in and open up I can't remember which one I got open. Let's go look at the other market. So this is the Dow and the Russell. All right. So the other one is the S&P and the NASDAQ. So let's go turn on the S&P and the NASDAQ here. Go S&P. Well, the mini S&P and the mini NASDAQ. There it is right there. Okay. So now we got the S&P and the NASDAQ. And so on the top, we got the S&P, and the bottom, we got the NASDAQ. This is where we saw the Fibonacci ruler on the NASDAQ going from this low to here. We're back touching bouncing off the Fibonacci number. And the reason I came over here is because I wanted to look at the CMF on the NASDAQ, or that's on the S&P. How come I got these in the wrong spots? There we go. Put that NASDAQ. So they're side by side. So see we're on the back side of this downtrend. So it's bouncing off the 50% level. And that's what I was going to say. A lot of times that's an advanced buy signal. You'll buy right there when the market retraces, pulls back, touches that 50%, buy right there. And then if it continues to fall, you add on to your position at the 61.8. And if it continues to fall, you can be ballsy and put another one on at 78.6. But then if it breaks down in here, you got to get out and you're going to take a big loss. But you're anticipating the bounce off of that longer term position trade, right? Looking for a bullish market. So you want to do this when you got some pretty confidence that this market's going to be bullish, but it's pulling back against these Fibonacci sequences. And when you come in here, you buy one at 50, buy one at 61.8. Or you can be more cautious, not buy one at 50. You can wait till it hits 61.8, buy one at 61.8, buy one at 78.6. That's why you're only two positions. It's called catching a falling knife, all right? Because the market's falling. It's coming against your position, and you're buying low as it hits these Fibonacci numbers. And then in anticipation that the market's going to turn and rally and go back up this Fibonacci sequence from the ABC pattern. So that's a longer term trade. And you're going to pick up and look for the market to come up and break that previous high. So that would be that trade. So you can pick up into the Fibonacci sweet spot. All right. Just to give you an idea of another trading strategy. And that's what that is right there. That's how you trade the Fibonacci pullbacks. All right. Let's go ahead and delete all those. I like to trade the color changes. So here we are coming in. We're going to come in here and we're going to drop in order to take another short position on the NASDAQ. We're sitting here bouncing right around that VWAP. People think that VWAP is so important. So remember, the VWAP is like a rubber band. It becomes support and resistance, and the market likes to just kind of snake across that VWAP back and forth if it's an indecisive market. If it's a decisively bullish market, it's going to go above that VWAP and never come back. It's just going to create higher highs and higher lows above the VWAP, and that's really what we kind of want to see. And that's why I've got the stock market pulled up over here on my other market, on my other chart, on my other screen. And given a few minutes here, we'll play just a couple minutes longer, see if we can't pick up a drop out of this little flag right now. We're getting a little shelf formation. I call them shelves. So I'd like to see that thing come out, break below that shelf, and flush down one more time with a nice little ABC pattern here. Okay, so that's what I'm looking for here. So that's why I'm going to take the reversal, and if it breaks below that green bar, I'm going to anticipate that the market's going to continue to fall. But if it goes up and breaks that average true range, those yellow dots, and closes above it, well, then the market's changed back to bullish again, and we could go long right there. That would be a buy signal to go long, but because the market's already got four flat bottom bars, I would not go long. I would, if it closes above and holds above that yellow dot, I'll kill this order, and then I'd look for it to come back down and then rally back up once again. So then we would look for the long position trade. Right now, we're just going to look and see if this market won't. Our thought here is if it stays below those yellow dots and breaks a new low, then we'll take that next leg down and look for it to continue to fall. The bars are getting smaller. They're not quite so big and aggressive. They're not $400 or $500 tall at this point. They're about $200 tall, which not nearly as bad. Okay, so we're short the NASDAQ once again, looking for it to break below that shelf. And we want to see a nice move this time. Come on, buddy. Come down and flush lower. Just flush, flush, flush like a toilet. Swirl, swirl, swirl. I don't want it to come back, and I want it to go decisively in my favor. Come on, decisive, buddy. Decisive. No, it's not decisive. Come on. Oh, look at that. We're in a drawdown again. Not what we wanted to see. This is being indecisive. We wanted to see it just decisively move in our favor, just drop and go. And where it's not going to do that, it's getting a little choppy and indecisive here at the top of the hour, right at 8 o'clock. Come on, we need you to fall one more time. There you go. There we go. All right. Let's put a little target in here. Can't get my target in there. Oh, came back and stopped us out. Said, I'm going to fake you guys out. And I'm like, well, okay, then I'll fake you out. Okay, I'm going to add OCO in here. Now let's see if it wants to break higher. And okay, that put us up $1,000. That was a nice little move. You're like, Lan, why don't you stay in? Look, it's going to go to the moon. Well, I wanted to. My goal is $500 a day, right? And that put us up $1,000 on that reversal. So we took the reversal. That put $1,000 in the bank, and that gives us a little buffer. Now we can trade a little bit more now if we want to. We've reached our daily goal. Our daily goal is 500. Get up to 500, and then once you have a daily goal, you get your 500. Then you can decide if you want to continue to trade. And if you set your next goal for let's say another $250 till you go to 250. If you lose 250 off of that 500, then you have to stop trading because you don't want to, blow your whole wad trying to get more money. So once we got our goal, now we're up $1,000. We're over our, and that's a nice move for our first day of the new October month, right? First day of the new October month. Let's see if I can pull up our. Give me 1 second here. We're going to come in and small account challenge. So we can come in here now. We could put in 1067, 1067.50. And I need to start a new calendar, don't I? Because this is still the September calendar. So that needs to be the October. So this is October 2nd. October 2nd. And I'll create a new spreadsheet for us going into October. So we can't add that 1067 to September. This is October. All right. So that's our trading for the classroom here. All right, I wanted to share with you. Oh, look at it go. Still going. Maybe some of you guys stayed in and you're up $2,000. So hopefully you caught that reversal like I did. And we thought we were going to get a little shelf here and fake us out and then go to the downside, and it faked us out and went to the upside. And we're like, all right, we're going to play both sides of this trend this time. We tried to trade both sides. Remember that? We tried to trade both sides right here, and we got burned. So it didn't take off, but this time it did. It took right off and went. We caught it. We got out right here. So it's up a little bit more than where we got out. Still running. Look at that NASDAQ go. Look at the 2-minute chart go. The 2-minute chart broke that trend to the downside, those bulls and bears. We're on the back side of the CMF, but it's breaking higher nonetheless, starting to rally hard. That's pretty cool. Nice market. Nice moving today. I'm a little bit happier with this market today than in days past. Days past, we got a lot of chop. A little bit of chop in here. And we got a couple of nice breaks. So not been such a bad market this morning. Look at all the flat bottom bars going here on the S&P. We love flat bottom bars. Flat bottom bars. That's where it's at. Look at that nice volume coming in at the top of the hour. Remember, I always tell you, top of the hour is kind of watch the top of the hours. Some reason these big institutions, and those are the guys that are moving the market. Us little guys, we don't move the market. We're like flies on an elephant's ass. All right. All we do is jump on and go for a ride. And so these big institutions, for some reason, they like to trade at the top of the hour. And I don't know what that is. I don't know if they've been in some kind of a, board meeting at their offices, and they're all like, okay, I guess everybody go out and pick up your NASDAQ shares or whatever it is, because, okay, the meeting's over, and they all run out there. Okay, about 8 o'clock, we'll come back from our coffee break, and I'll buy my shares. I don't know if that's what it is, or I don't know why, but at the top of the hour, these markets have a tendency to start to move. So if you're trading and you're looking at the clock, and you're like, yeah, it's 9:40 or it's 8:40, we got 20 minutes to the top of the bell, and you're down a little bit, stop trading. Just wait. Go get yourself a cup of coffee or hot chocolate or whatever it is you drink. Go, come back at 9 o'clock. Come back at 10 o'clock, and watch these markets have a tendency to make these new moves at the top of the hour. So go take a break and come back if you're down a little bit. All right, let's go over. I got something I want to share with you. First of all, I wouldn't be doing my due diligence if I didn't advertise that we got the first of all, platform we're using is Track and Trade. This is the Track and Trade Live Futures version. Again, you can get it over at trackandtrade.com, and you can come and join us here and follow along. Again, that's the futures version, so you need the futures version of the software so that it will attach to the Chicago Exchange. And that's where you want to be. You want to be trading out of Chicago, not out of New York when you do your day trading, because you can open up an account in Chicago with as little as $5,000 and you have no pattern day trading rules. Now, you can't trade Microsoft and Amazon and all the big stocks, but you can trade the indexes. You can trade things like gold and silver. You can trade crude oil, all kinds of fun things. Soybeans, you can trade the softs if you want to, sugar and cotton, rice, all kinds of fun things. All the currencies, Canadian dollar, euro dollar, all kinds of fun stuff you can trade here in the futures market. So the nice thing about it, again, you leveraged market, so you can start with a very small amount of money, and no pattern day trading rules, so you can trade all you want. No penalty for going short. No interest. No problem. Just come and trade, trade, trade. Do what you want. Futures market. All right. So that's the software that you need to do what we're doing here today. The other thing I really want you to do, of course, is subscribe and ring the bell. Make sure you ring the bell so that the little YouTubers guys out there will remind you when we're going live, because you don't want to miss the live stuff. I mean, it's fun to come back and watch YouTube and watch these things after the fact, but it's a lot more fun if you can be here live and follow along with us and do it yourself, right? See what we're doing, follow along. Just kind of a great, fun little community for you to be here with us. So go subscribe and ring the bell. And then the other thing I need to tell you before we go off and start looking at the stock market is today is the first day. It's the first Monday of the month, and so that means the October issue of Pitt News Magazine drops. You really want to see the October issue of the Pitt News Magazine. David Duty, especially if you're a day trader, David Duty, one of my buddies from Trade Mentors, one of the co-founders of Trade Mentors, is telling about um, his day trading strategy, and he's really been knocking home runs and doing a good job. So he wants to share that with you guys, and that is all completely detailed out in Pitt News Magazine. So that's Pitt News Magazine. You want to get that over there at pitnews.com, and the coupon code is LANLIVE $1. You get the entire year, not just one issue, the entire year for $1. And it's got audio. We got audio all throughout the whole magazine. Every article has audio on it, so you can listen to it. So it's kind of like an audio book. You can read it, so you have all your notes there in case he talks about something, or if we talk about it, something. A lot of the articles are about trading concepts, and then of course many of them come along sometimes. Like for example, David Duty has video for his trading strategy. Not only you can listen to the article, you can read the article and keep the notes, and then you can also watch David Duty trade it with the video. So it's a Pitt News Magazine is specifically designed for traders. It's an amazing magazine. You're going to love it. Go over and get it an entire year for $1. Why wouldn't you do it for $1? All right, let's get back to, and one more thing. Let me throw this up here. We got a special going. If you go get it, you get Solving the 5 Pitfalls of Covered Calls, How to Trade for Income. Now, I know we haven't talked much about calls and puts and options here in this class, but we'll do more of that. We're going to venture out, and our favorite thing, of course, is doing a little day trading. But we'll talk about covered calls and options and stuff like that in this class too. We just kind of need to venture out a little bit more. Just getting started. I'm new at this YouTuber stuff, so I'm kind of getting used to all the YouTube stuff. We got new technology today. Got this new microphone. Hopefully, it sounds better. And all right, let's get back to. Let's see some comments we got coming in here. Looking forward to it. Steve says looking forward to it. Good. Glad to have you, Steve. Good to see you. We got Oliver in the house. So nice to see you, Oliver. We got, I just jumped in soybean. Thanks for the trade miner. Oh, yeah. I actually have trade miner pulled up. I don't have the futures version pulled up for us today. I have the stock version. So I thought we'd talk a little bit about the stock version of trade miner. Oliver says, hope to play the session. Hope it plays session play. So glad to have you guys. Thanks for the comments. Make sure you leave a comment down below the video too, because that always, and make sure you hit that little thumbs up bell. YouTube really likes it when we do that. Oh, we got to get back over and look at this pattern that's coming in here. Oh, not that one. There we go. Look at this NASDAQ breaking below the yellow dots are coming into a decision point right here. So it's going to break below those yellow dots and flush lower. But we would expect that thing to give us a little ABC pattern up out of here, wouldn't we? We'd expect it to go A, B, C, and start to rally, but it's failing right now. So that's a failure pattern. A failed pattern is oftentimes the best pattern. And that's how we got this one here. This pattern failed to the downside and we took the long position. That's why we're up $1,000, right? So we're only half an hour into the day. We're already up $1,000. And this thing's flushing back down off of that flat bottom pattern. What is that flat bottom pattern? You guys remember? We're going to come over here and look at the, let me get my face off of here for a second. Flat bottom girls, right? Where's it at? Where's it at? Oh, did I pass it? I got this. This is my book. This is out of my book. All these patterns in here. So there's our flat bottom. There's the one right there. That's what's happening right there on the Nasdaq. So it's coming down, making a little pullback. It's going flat across here. We got the yellow dots below, and it broke through. Generally, we see that thing sell off. Now, if we go back and look at the chart. It's starting to rebound. It's came down. It touched that 19 or 14,940. Watch these even numbers. Markets like to use those even numbers as areas of support and resistance. We also have pivot points. So remember the pivot points. We're going to come in here to a quarterly option. We're going to drop a call option on here. Look at that. There you go. There's your pivot point. That's an option strike price. Markets like to move between these option strike prices. So you can drop those. Track and trade has the ability to drag and drop options. We haven't got into that a whole lot, but we will. We'll talk about it a little bit more. But you can see down here, I'm moving that option strike up and down, and it jumps to the different strike prices, and those become what we call, option pivot points. Market likes to move to these options because there's a lot of people trading options, and so they pull those markets down and use them as like magnets as well. Okay. So keep that in mind that these option strike prices are very important to us. You can actually draw those on there and then draw your horizontal lines on wherever those are and keep those on there. So now we're starting to bounce off of that number down there and starting to rally once again. Okay, it went up, broke a previous high, took out all the trailing stops it got in on a break below that yellow dot. Now let's see if it continues to fall. You can take a short position right there and anticipate this thing dropping out the bottom. We'd want to see a nice trend. We haven't really got, the markets really have been kind of weak lately. The last couple of months as they've coming down off of that big bullish market that we're coming out of. And so when we get this market turned around, we're going to go talk about the stock market here in just a minute. I'm going to pull it up and bring it over. When we start to turn around and start to rally, these markets over here, you watch, we're going to have opportunities to catch big, long trends. We'll get 10, 15, 20 bars moves, all flat bottom bars, and we'll get into one of those things, and with all kinds of fun things you can do. You can do the pyramiding, you can do the pillaring, you can do the castling, you can do all kinds of really fun stuff once you really do catch one of those big long moves and big long trends in the market. They come along rare, especially more rare when the market's in a downtrend on the overall longer term market. In fact, I think now is probably a good time. Let's just go ahead and bring the stock market in here. All right, so this is the stock market version. Now this is shh, don't tell anybody. All right. All right, here we go. Shh, don't tell anybody. This is my girlfriend's account. So I'm pulling up my girlfriend's account right now and using it to look at the market. So don't tell her I'm playing with her market live on YouTube. She wouldn't like that very well. All right, but this is what we got going here. This is Apple. I'm going to go down through just kind of this quick list of stocks. So this is Apple. This is what I call my canaries in the coal mine, or my bellwether stocks. All right. So again, like I mentioned earlier, is I like to go through, and I like to take the money out of the futures trading, our day trading, or if we're doing a little scalping, I'd say what we did today was more scalping than day trading. Day trading is when we catch a trend and we stay in it. We do the pillaring, the pyramiding, and the castling. We haven't had a chance to do that in the last couple months, and the reason is because the market's been in this big bearish trend for 2 months, and I kind of started this live YouTube thing. Now my YouTube channel's been going for years and years and years, right? I've been in this market for over 30 years. But I obviously didn't start my YouTube channel 30 years ago, but it's been going for a number of years. But I just started doing these live classes this year. And the reason I'm doing the live classes is because I'm teaching live at the university down here in St. George, and I wanted to be able to have those students. They don't, because I teach at night. I can't really do some real good solid trading for them at nighttime in the class. So we do more educational, more academic style education in the class. And that's why you see, I got a lot of slides and stuff I share with you guys. That's mostly comes from my university classes. And then I wanted to be able to trade for them. And I was like, well, I asked the university if I could have an afternoon class, and they said no. We just want you to teach at night. You're in the night class sessions. So I decided to start doing these classes. We used to, we used to last year. We went out to one of the students has an airplane hangar, and I'm a pilot, and I like to fly airplanes, and so I kind of connected with the pilots that like to come to class. And so we used to go out last year. We'd go out to his hangar, and we'd invite the group of guys to come, and we'd go out and anybody who wanted to from the classes, we'd go out to this guy's hangar, and he had a great big huge giant monitor, and I won't mention his name in class, but we would not that I don't think he would mind, but he would have his computer all set up there in his airplane hangar. We'd all sit out there in the airplane hangar and watch the markets together and trade. It was a lot of fun. Problem is that a lot of guys can't make the airplane hangar and they can't do that. So I decided to do it on YouTube, and a couple other guys volunteered their houses so we could go to their house and trade. But it makes it difficult for everybody to get there, and people feel a little bit uncomfortable going to somebody else's house or something. So I decided to start doing the live YouTube instead. And so that's why we're doing this. We're kind of doing it so that the students from the university can all get together and here in the morning, and we can all trade together. So everybody's welcome, not just the university students. Of course, anybody who wants to from all over the world, come and join us. Um, this is what this is all about. It's all about an educational opportunity to come and learn. And I'll share with you the things that I've learned. Again, I'm not here to tell you how to trade. I'm just going to show you how I like to trade. And that's what it's all about. So I like to take my money out of the futures market and put it into the stock market. That's what I like to do. Now you can do whatever you want with it. You can take that money. The money, I figured that when we day trade, that's an income source, right? That's like working at Walmart as a greeter. You're going to make some money. What are you going to do with that money as a Walmart greeter? You're going to take it and put it in the stock market. You start investing, right? Okay. So we're going to take our money from our job, which is day trading, and then we're going to take that money and invest it in the stock market. That's what I like to do. Again, you can go buy groceries with it, whatever you want, but here's what I like to do. So we're going to come over to the bellwether stocks, and these are the bellwether stocks you can see in here. I've got Apple, Adobe, we got Amazon, we got Boeing, Caterpillar, Salesforce, we got John Deere, we got Google, we got Intel, Johnson and Johnson, Meta, mRNA or Moderna. We got Microsoft, we got Netflix, Nvidia, PayPal. Of course, we got the Qs, which is the Nasdaq, right? This is what we've been day trading right here. This same market. The difference is we do it in the futures market where we get the leverage and there's no pattern day trading rules, so we can start with a smaller market, smaller investment, and make bigger money. Of course, it goes both ways. I always have to say, if you're going to make more money, you can also lose more money. And then we got the S&P, we got the Tesla down in here, and we got USO for oil. All right, so these are kind of my bellwether stocks. And of course, there's lots of other stocks that we can go look at and lots of other stocks we can trade. I'm just saying these are the bellwether stocks. These are kind of the big happy daddies. And so this is what we kind of read the market from. And now what we're looking at is we're looking at a market. If you're familiar with if you have my book, again, shameless plug. Go get my book, Stock Market Playbook of Strategies. You're going to learn all about Elliott wave theory. You're going to learn about Fibonacci theory, and you're going to learn about the Richard Wyckoff theory. Those three things are kind of like our core foundation of building a good trading strategy. That's like the concrete of a house. All right. Those three things. You got to know those three things. Otherwise, everything else means nothing. Because that everything else besides Fibonacci, Elliott wave, and Richard Wyckoff theory, which is the accumulation, distribution, and the chalk and money flow. That's why those are on there. That combination of tools, all talked about in the stock market playbook, uh, is the foundation that we're building our entire house on. Everything else we do, recurring price patterns, risk and money management strategies, whatever you want to use, ATR, whether you want to use indicators, mathematical models, those are built all on top. Those are all on top of our foundation. So you learn about the foundation, and then you learn what the house is, what you can actually build on top of the foundation. So the foundation is all this three drive patterns here. And what we generally look for is we look for a nice three drive pattern, drive one, drive two, drive three. You get these little shelves in here, these little patterns that cause these little three drive patterns. And then once we get the three drive pattern to the top, we anticipate a reversal or an ABC pattern off the top. So we get an A, B, C, and then we anticipate a 50% retracement off the major move. Okay, so that's your Fibonacci. So that's your Fibonacci, your Elliott wave. The Elliott wave is the three drive pattern with the ABC pattern. That's an Elliott wave. We can take the little Elliott wave tool in here just to give you a quick idea. So we go, this is X, 1, 2, 3, 4, 5, A, B, C. All right, that's an Elliott wave. And we've got a perfect little Elliott wave, not completely perfect because we did have this one bar that broke the Elliott drive right there. So it's not a perfect Elliott wave, but man alive, it's almost right straight out of the manual. Drive 1, drive 2, drive 3, A, B, C. And then we come down into the chalk and money flow. And this is where you can see the chalk and money flow is telling us where the big boys are starting to buy up. So they start to buy here and they start to buy here. That's why that's green in that pullback, because the big boys start to buy as the market falls and comes back in that strategy I talked to you about. So as it comes down here, they start accumulating shares, and then the market, as it starts to rally, they sell them off. Well, we start to buy when they start to sell. Okay, so the big boys, the big bankers, they bought up as the market's coming down, and they just continually accumulate. That's why it's called the accumulation model. All right, so they accumulate all down in here in the green mode, and then when it turns and starts to rally, you and I, as small speculators, we jump on, we start to buy. So we start to buy all the way up the uptrend. Right, this is called the Wyckoff theory. And so the banks and big hedge funds, they're all selling to us because it's a one for one market. For every time somebody buys, somebody has to sell. Well, if you and I, as small speculators, are buying this big rally that's about to come, there's got to be somebody that's selling them to us, and that's the big banks and the hedge funds because they bought all down through here. That's what this is all showing, right? And so they go through these recurring price patterns. So can it make one more drive down? It certainly can. It can make an Elliott wave to the drive down. So we get to drive 1, drive 2, drive 3, and then we'd go A, B, C this way. Come down, we get our retracement. Looks like we're coming in 61.8 right now. And again, remember, we're not engineers, we're artists. And so the market, we'd expect it to come up if it was going to make a third drive and come back down one more time. And that would be the ABC three drive pattern to the downside. Drive 1, drive 2, drive 3. How do you know the drive? Well, you have the bulls and bears. The bulls and bears with these blue dots helps you count the drives of the market. That's why you count them. Those are the Elliott waves. And then you have the Fibonacci stuff that's laid over the top. That's what's changing the price bars from red, yellow, and green is the Fibonacci stuff. So the Fibonacci numbers are what's turning the price bars red, yellow, and green through this bulls and bears indicator. That's why it's important to have the bulls and bears indicator. Okay, because that tells you Fibonacci, Elliott wave, and then the chalk and money flow and the accumulation distribution model are down here telling you the Richard Wyckoff theory. And when we put those three together, that's your 1, 2, 3 knockout punch. And there's an article, again, in that Pitt News Magazine. Pitt News Magazine, if you go read the September issue, I wrote a whole article about the chalk and money flow and how those things all work together hand in hand. If you don't have the Pitt News Magazine, go get the Pitt News Magazine. It's where I teach all this stuff. All right. That's how I stay in touch with you guys. I write all this stuff out on the Pitt News Magazine. All right. So this is kind of where we're at here. So you're like, okay, Lan, where are we at with the stock market overall? Should we be buying right now? Yeah, this would be a good place to start accumulating shares on the second ABC down. Okay. It doesn't mean it can't go down and start making a third drive. Okay, but the intercept right in here, this is the natural intercept. You can see that the accumulation distribution model is down here starting to curl off the bottom and start to go back up. So everything here is telling us that it's okay to start to accumulate some shares. Now, are you going to go put your whole portfolio in right now, all at once? No, but right now would be a good time to buy some shares because the other thing is that it could come down, pull back, make this drive come up, hit those blue lights, which is what we'd expect, and then it could fall one more time and come down here. So we don't want to dump our entire portfolio in, but we do want to start to accumulate in preparation for the fact that this could be a point where this market could break that ABC pattern on the Elliott wave and start to rally once again. So we would get the ABC pattern going this way, and we would want to see it come up and test that previous high, come back, pull back, and then start to rally up once more and give us that ABC pattern to the upside. That would be our reversal point right here, and we would maybe anticipate the Fibonacci bow tie, which we've talked about in past classes. All right, so that's Apple. Let's come down and look at some of these others. This is Adobe. And Adobe, you can see, is making a little topping formation. It's got a little head and shoulders up there. So let's clear off some of this stuff. Once again, we got the Fibonacci ruler that's going up to the top like this. And Adobe's just showing too much strength. It doesn't seem like it wants to come back down into that Fibonacci sweet spot, okay, off of the major move. So we got this little head and shoulders up here, and we can see the head and shoulders. This is your left shoulder right here. This is your neckline. This is your head. Notice it's higher than the left shoulder, and we're making another neckline. We'd expect that right shoulder to come up in there. And technically speaking, that is bearish. So we'd expect it to come up, hit those blue lights, break those blue lights, and turn and fall, and that's where we'd see this market come back down. So I'm not real anxious to get into Adobe because that little topping pattern is generally bearish. Does that mean it can't just turn and start to go and rally and go take off to the moon? No, it certainly can. It's just that this little head and shoulders pattern is kind of a bearish pattern and it hasn't reached our full potential to the downside. But this is a strong market, so we just have to take that into consideration. Not ready to buy into this market because there's not a buy signal for me yet. Amazon, this has got some really good, we talked about Amazon in the past, got a really good earnings. So Amazon came out with earnings right there. You have that nice little trend line that broke right there and started to rally, but then it failed. But the reason it failed, in my opinion, what I think happened is the rest of the market hit its max peak and wanted to turn and fall. It hit the three drive pattern on the overall market on that QQQ on that Nasdaq, and so it started to fall, and so it dragged the Amazon down. So Amazon's really had some good earnings and some good markets. It's just been drugged down by the other markets. So I don't think that it's I don't think we're going to see this big nasty full 150 61 point pullback on Amazon. So if we come in here and draw from here all the way up to the very top, you can see that the come down and it touched that first 38.4 right there. But we got 50% here and 61.8% down here. And you'll notice the accumulation, the chalk and money flow, it's still coming down. We got lower, 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 and it's starting to round out. So I'm kind of looking for this thing to turn, start to go back up, and this is where I'd start to go long on Amazon. We got Boeing in here. Boeing, you can see my girlfriend, she bought 3 shares right there at the bottom of that Boeing, but it broke through that area of support, that long red area right there, and it's still breaking lower. So she's going to have to do a little more accumulation down here and buy down here at 161.8. I would recommend that she do that. Put an order in and get a little bit more down in here. So start doing her accumulation. She's starting to buy as this thing's come way down here. She's anticipating a rally. Again, don't tell her I'm using her account here on YouTube. She'll get mad at me. All right, so come into Caterpillar. Caterpillar's coming in here. This is a nice little, gave us only 2 drives, drive 1, drive 2, all the way to the top. It came in, I thought we might get a drive 3 right in there, and it failed the drive 3, and it's starting to come back down. It's just been neutral. Now, Caterpillar had some bad earnings, so that's why they didn't make that third drive high, but it's not falling like everyone expected either, down into that 50% with everything else. So it's a little bit stronger. We'll have to watch it and see. There's no buy signal on that one. We got Salesforce is coming down, making the ABC off the top. So this is A, B, C. And these little arrows, these little lines that I've got drawn in here is how far back this market's fallen in the past. So I went back in time and measured the previous drawdowns, the backs. But you can see this is just an ABC off the top, and we're just making that same pattern. It's coming down here. It's testing this B point right here. So we're looking to maybe start accumulating some Salesforce down in here. And right here, this market's already starting to turn around. So it looks a little bit bullish in here. Might not, doesn't necessarily have to break that B point. Might come down and make a little double bottom, and we might see this thing come and rally back up. Okay, you have to be careful because if it does rally up, break above here and continue up and test this previous high with one fell swoop, that becomes what we call a butterfly pattern. All right, so that butterfly pattern comes in here like this. And if it goes all the way back up there and tests that previous high up in there, you get this little butterfly pattern. And it ends up being those wings like that. And the problem with that pattern is that that's bearish. It comes up and then we would expect it to flush back down like that. So you have to be careful as it comes and creates this little butterfly pattern here on Salesforce. And then we got John Deere. Let's clean up some of these drawings here on John Deere. But you can see down here, accumulation distribution model down here. So we got the accumulation distribution, chalk and money flows getting ready to start to rally. We got our full ABC to the downside right here. So we got a little ABC top formation right there. And then the market dropped right down to the 200% level. But the overall longer term one is here, right? A, B, C, because of the blue lights. You can see the blue lights are telling us this is the longer one. We're right here breaking through this previous low. So if we take this We got this previous low right here, and the market's starting to fall, broken through that, and it's down, and we'll look for it to come down. There's that 78, 76.4 that it's trying to break through right now. But our next level would be down here at 100%. And we would want to see this thing, but notice the accumulation has already started to rally. So it's starting to weaken to the downside, that strength to the upside. And we would look for this market. That's a full ABC pattern. It's just how far and where is it going to turn. Right down in here is where we want to be a buyer. We start looking for this market to turn and start to rally once again. We got a long ways before those blue lights come in. So wherever they intercept, that's your primary entry point. We got Google in here, still with a nice little ABC pattern up in here. The question is it going to be, this is kind of a decision point. So it's coming in here with A, B, C. It's breaking those blue lights, and then is it going to drop one more time? Or is it going to break out those blue lights, give us just a tiny pullback, and then take off and rally and break all-time new highs up in here? All right, so break our highs right there. So that's what we're looking for. Kind of a difficult one right now. We got Intel. I'm just going to go through these quick. Intel's coming around here. Again, chalk and money flows down here starting to reverse. Intel's down here into the buying zone. Buy low, sell high. Remember, we want to buy low, we want to sell high. So when it comes back up, this would be an A, B, C projection to the upside. We'd go A, B, C, and then we'd expect it to come up and test these previous highs up in here. And this is where we'd want to be a seller to take our profits on that one. So that's if you want to buy into this rally. It looks like it wants to turn. The accumulation area is right down in here. It doesn't mean it can't turn and make one more down to the downside. It depends on other factors, right? How the economy, how the other markets are doing, and what's going on politically and all that kind of stuff. But we got some breaks in here. You can watch your natural trend lines. And then this might flush and come back down and test these previous lows once again, which would be right down in here if it can't hold that level there. You got kind of a three drive. This is what I call three times a charm. So you got kind of a flat market that's tried three times to go. So this is charm one, this is charm two, and then on charm three we generally go. So if it fails the first charm, fails the second charm, didn't really fail the second charm, but it kind of failed the second charm, and then this would be the third charm, and we'd expect it to go at that point. Johnson and Johnson, way down into the ABC pattern, will be buyers down in here. You see my girlfriend on the other one. What was it? It was a Boeing. She bought down in this region here. So we'll watch this right in here. We're going to be buyers right down in this region here. This is the area of support, and then we look for a rally up out of here and maybe an ABC pattern to the upside. So that'd be Johnson and Johnson. We want to see this chalk and money flow come in here with a nice big green section down in here before we start to buy. And then Meta. This is Meta. Meta's been so strong. I don't think it's ever going to come down into that green bar. And it's looking like it wants to be a B, C to the upside right here. Again, be careful of that little butterfly pattern that it's testing. If it comes up here and breaks these previous highs, it could flush out of that right there and come back down one more time and give us that three times a charm. Remember, charm one, charm two, fail on the charm two and come over and make a charm three, and that's where it would go. So be careful with that one. We got Moderna. Moderna, I'm surprised. I thought she had some Moderna. But Moderna is down here getting ready for the flu season, right? Getting ready for the corona season. The government's already said they're going to buy millions and billions of dollars worth of coronavirus um, uh, shots. So everybody's getting ready to watch Moderna take off like a rocket ship. So if you want to buy a little Moderna because the government's going to buy, they're going to have another run of Corona, and then we're going to anticipate that this would be a great place to be picking up some Moderna. And we got it making a little ABC bottom. It didn't break the previous low, so that's our little accumulation zone right down in here, and we're going to go long on Moderna in anticipation of a real nice, strong Corona season. All right, so we got Microsoft in here making a bounce at the same place. It's kind of that A, B, C pattern we talked about. It's an X1S A1. For those of you who are familiar with that, again, that's in my book. You can go learn how to count and measure these waves. That's an XSA1, which is a low probability, and it failed. So we're coming in here with this. This would be the X2SA1. X2SA1 is the second highest probability, and then, of course, X3SA1 is your highest probability. But this is the ABC retracement on that Elliott wave pattern. So we had the Elliott wave pattern. We had drive one, drive two, drive three. And so we break up here. We're coming back with the ABC off the top. So that's the ABC pattern. And right down in here in this Fibonacci sweet spot's where we want to start being the buyers, right? Doesn't mean it can't go one more time. It certainly can. It can make an Elliott wave to the downside. So that would be your A, B, C. And then we'd expect it to come down into this 61.8, which would be the 100% projection right there. And that's where we'd be a buyer to the long side. We'd start to accumulate shares. All right. We'd watch that chalk and money flow, and we want that thing. It's starting to curl right now. If we got a little double bottom in here, we could buy down there. But this would be a great place to start to buy some Microsoft right there. Okay. So Netflix. Netflix is the same. I'm not going to go into greater detail on this one and draw all the ABCs, but you can see we're right here at the dead center of that overall longer term Fibonacci retracement level. And right there, 50%. As that thing intercepts that blue light, we're on the second drive down. So this is your X1A1, X2A1, which is a good place to start accumulating shares. Not that we can't expect it to come down, so don't dump your entire account in there because you might have to buy some more down here to dollar cost average. But you can see that chalk and money flows way down here deep into the green zone, into your accumulation zone. So you're going to want to, this is a good place. It's starting to curl and looks like it wants to turn and go back up. So that's a good place to start buying some Netflix. NVIDIA. Again, we got the little head and shoulders formation. Be careful on that because it could make that right shoulder and come down. We got PayPal, which is down here in that same zone. I've drawn on this one a million times, so let's go ahead and clean all these off. And we got that big long drop. We got this little double ABC pattern off of that move here, ABC to the top. Now we're down here testing this low right here once again. And we got the accumulation zone right in here. So this is our accumulation, and this would be a great place to start adding on a few shares of PayPal in anticipation of a continuation of the uptrend. All right, so we're going to come into the Qs. Now this is the longer term Qs. Of course, we're very familiar with the Qs because we trade the Qs every single day. But nonetheless, this is your little ABC formation off the top here. So ABC. How do I know where to draw these ABCs? Well, these blue lights tell me. All right, these blue lights tell me where to draw these ABCs. So here it is once again. Your perfect right straight out of the manual. Drive 1, drive 2, drive 3 to the top. This is your ABC to the bottom. Down we go. And then we would anticipate being a buyer down in this region here, right? Looking for, again, the accumulation model. And we want to start accumulating shares in anticipation of a continuation of the uptrend. All right, so then we come to the S&P, exactly the same thing. I'm not going to go through great detail on this one, but we got the little spider web drawn in there where those X1SA1, and this would be our X2SA1. Not that it can't go to X3SA1, but this is a good place to start accumulating a few shares in here in anticipation of the market turning and maybe starting to rally here. If you're bearish on the market and you think we got some politics that are giving us some stress, you might expect another downtrend, and then we could buy in here instead. All right, and then Tesla. Tesla, everybody loves Tesla. Tesla and Apple have become kind of the darlings of the industry. So you got your nice little pattern here, A, B, C, and we're holding right here on the 50% pullback of that first rally. We got the blue lights coming in. We got the accumulation model in here making higher highs. So this accumulation is giving us an accumulation like this. Looks like it wants to rally. We do have some additional downside potential. Of course, it could come down and give us a little ABC pattern off the top here, A, B, C, and drop all the way back down and test this previous low. So right in there, this is accumulation though. So if you were bullish on Tesla, you could put a little bit of Tesla in anticipation of the possibility of this uptrend ABC, which would be A, B, C, and then we look for the uptrend, come up and test this previous high up in here on Tesla. So buy the dips, buy the valleys, sell the rallies. When it comes into the red zone, that's where I start to look to buy. But we also want to be mindful of the ABC patterns and the downside potential and those Elliott wave high probability X1 SA1, X2 SA1 to be mindful of that. And then of course we got crude oil, which nobody wants to see go higher. And fortunately, fortunately, it's dropping today, which is what I was hoping for. I didn't want to see it go up and break that previous high, which is exactly what it did. And that scared everybody. If you remember everybody saying, oh, crude oil is going to $100 a barrel. Well, it broke that high, scared everybody, but it's starting to flush down and it's breaking this little ABC today. So we could actually go back over to the futures market and take a look at the crude oil, and maybe we'll do that tomorrow. We're running out of time today. But I did want to share with you a little bit on the what I'm seeing over here in the stock market, and I did want to play with Trade Miner a little bit for you guys, but we're running out of time. Not going to have time to do that today. Maybe we can do that tomorrow. All right, guys. Volume seems a little low for you. David Kipp says that the volume seems a little low. I'm not sure what market we were looking at when you said that. I apologize for not being a little bit more attentive to the comments. We got B Taylor's in the house. Nice to see you, B Taylor. And Oliver, I think we already said hi to Oliver. So, oh no, we got Oliver's in here saying soybean things. Oh yeah, we did talk about Oliver. All right, guys, I think we're going to wrap it up here. What I'd like you to do, if you wouldn't mind, just go down there and hit that little um, thumbs up and leave a comment below the chart. That always helps. Be great for you just to at least tell me where you're from, where everybody's at, and put your city and state in there or country. It's always great fun to see where everybody's from. And so again, I got my in-person class at the university tonight. If you're anywhere near or close to this area, please come and join us. You can go to dixiedaytraders.com. dixiedaytraders.com. Get yourself registered. Got all the information there where you can find us, and we'll see you tonight at 6 o'clock at the university. All right. Take care, guys. I'm going to flip back over to the futures market. Watch that just for a second as we close out. Which one is this? This is S&P 500 and the NASDAQ. I think I got the all four up. There's Dow. There's Dow. Oh, nope. I'm going to have to go switch this over to all of them. Let's go see all four, what they're all doing right now. Oh, I think we did the right thing. It looks like the market just started to go choppy and sideways and never did any continuation. So I think we did the right thing by switching over and staying away from the market for a little while. We got 15 minutes, it looks like, the top of the hour, so we'll wait for the top of the hour and maybe we can do a little bit more trading. We'll watch a little bit more. But I'll let you guys do that on your own. I'll let you go. Take care. Thanks, Dan. It's good to see you in here. Maybe we see you tonight in class. I know Dan is a local, so might be down here in this area. Take care, guys. See you later.